So Powell suggests that 4 hikes in total are likely this year. Does the data and the balance of risks, in your opinion, support that view? Because it also appears at this point that markets aren't fully priced into that scenario just yet.
So the markets are getting pretty close to it. Our own view has been 3 rate hikes, and I would say we're probably on the defensive of our projections on the Fed. So it would only be one more hike for the Fed to do this year. The dot plots, what came out in June was that the Fed is more likely to raise by 4 times this year, so 2 additional hikes. And what we heard from him was really nothing to strongly reinforce it or to diminish the expectations there. So his overall balance generally tacitly supports the framework that they've given us in terms of this 1 rate hike per quarter. So I would say right now we're probably based just on what he said today, it's still two hikes, 1 per quarter, still very much in the cards. I think the market's probably 90% priced in for that, so it's got a little bit more this year to price in, and then also next year. The market that has priced in about 2 additional hikes in 2019, whereas the Fed has indicated 3 more hikes. So I would say we have all the that additional hike in 2019 also to perhaps price in if needed going forward.
So
the market's a little bit more cautious, and it's because we're looking at the trade and we're looking at the yield curve.
Yeah, absolutely. That's what I wanted to pick up on next. I think it's interesting his commentary on trade appeared to be a little bit softer than it has been in the past. But how are you assessing the outlook for this trade war? Do you think it's something that the Fed should be paying more attention to? And is there anything Jay Powell can do to soften the impact on the US economy?
Well, so there's no question the Fed is looking at this. They've got a lot of economists on the payroll. They're looking at it very closely. To the extent they want to jump into the politics of it, when it's a current policy development and it's outside the Fed's mandate, I think what we saw was a very wise Fed chairman to just hold back and to be somewhat conservative and cautious on his remarks. He did enough to indicate that it's a potential downside to the economy, but he was also quick to follow that with that there was upside risk for the economy as well, and overall he sees the risk and balance. So, I would say they're watching it, just a wise choice not to jump into the heat of the argument and keep the Fed's apolitical nature intact.